Bitcoin drops to $60,000 following Iran's missile attack on Israel. And it turns we're going to turn our focus to the dollar as the safe haven assets takes an upward turn amid rising crisis in the Middle East. What does this spell for an already volatile currency market? All this and much more on the show today. Welcome. This is Market Pulse on News Central in partnership with Nairametrics. I am Joanna Mustafa. Let's begin with some of the top stories from the global market. A lot happening there. Bitcoin, the flagship cryptocurrency, dropped several digits to $60,000 yesterday following intense missile strikes by Iran on Israel. The primary crypto asset dropped by 3.1% to about $61,616 on the day of the Iranian assault on Israel. Bitcoin has also dropped 4.4% over the past week. So why is the price of Bitcoin being affected, by this geopolitical tension? Well, it's a risky asset, and at times of growing uncertainty, I beg your pardon, we see increasing risk aversion in the financial market. Investors, obviously following the trend, are selling off riskier assets like Bitcoin, leading to a drop in price. Gold and dollar, they are safe haven assets. They tend to benefit from such crisis. Coming now to global equities markets, they are, of course, from their first weekly loss. They're on course from their first weekly loss amid the threats of an escalation of conflict in the Middle East. Israel on Wednesday with a ground incursion against Hezbollah in southern Lebanon, while considering its response to Tuesday's missile attack by Iran. European stocks declined, tracking weakness in Asian equities as a world-beating rally in Chinese shares paused. All extended gains amid rising tensions in the Middle East. And the Stocks Europe 600 index fell by 0.4% at the open after a gauge of Chinese stocks snapped a 13-day winning run. Futures on the S&P 500 and Nasdaq 100 also declined. Hong Kong stocks plunged today. That snaps their 6-day winning streak as the China stimulus rally appeared to ease. Hang Seng Index as well closed 1.47% lower to end at 22,113.51, coming off a strong session yesterday that sent the index to its highest level since January 2023. We're going on a break right now. When we return, we'll come home to the NGX and see what's happening on the second day of trading in October and for the quarter. All right, you're still tuned in to Market Pulse. Right now, we are turning to the NGX, where we are seeing significant price movement with some of the most valuable stocks. We did have our guest, Matilda from Meristem, yesterday mention that industrial stocks would be on the losing end of this escalating violence in the Middle East. And true to word, it happened. The most valuable stock on the exchange took a beating today, dragging the equities market down significantly. It's a second day of negative trade for the month of October. It looks like we left the bulls back in September. Somebody needs to go back and bring them into the month of October. But yes, all share index is down by 1,167.97 points, which represents a 1.19% decline. We're seeing the all share index now. I mean, we're hoping for 99, but I mean, that's still far right now. 97,064.42 points. Market capitalization at 55.78 trillion naira, I believe. But yes, coming to the top gainers, Seplat is the 7th most valuable stock on the exchange. I mean, they accounted for, the gains that we saw, even though we're in the red today, but they account, of course, for 4.28% of market cap gain. They gained significantly today, 10%. It's noteworthy that Seplat kicked off the year with a share price of 2,310 naira. They've gained over 77.6% ever since. The 4,000 share price mark, they crossed it. Now they're inching towards the 5,000 share price mark with their strong gains today, 4,513 naira, 40 kobo. That's what we're seeing, a 10% gain. Livestock feed bouncing back. I guess it's been in the red for a bit. Now it gained today 9.93%. And we're seeing the others up there, Caviton, Mansard as well, making significant gains today, but not enough to push the markets in the green today. Let's see what the losers did to drag the markets down. Dangote Cement, the most valuable stock on the NGX, right? It accounts for 16.1% of the entire equities market. It's down today. Rising tensions in the Middle East, perhaps that's what's affecting it. Oil prices going up as well. So that is down significantly, 10%, down to 478 naira 80 kobo. Sharing that top loser spot with McNicholas as well, which is also down 10%. Dangote Cement, they began the year with a share price of 319 naira 90 kobo, and they have since gained 66.3% on their price valuation. But are we seeing price corrections, right? We're seeing almost every month they take a beating. They're down today to 478 naira 80 kobo. That's what we're seeing. Coming to some of the top traded stocks by volume and value, we're seeing trade volume drop significantly. Earlier in the week, I believe Monday, it was at 586 million shares, on Monday. Yesterday, it was 425. Today, we're seeing it inch lower when it comes to volume to 268.39 million shares being traded. Currency markets now, the naira strengthened marginally to 1,657 naira 87 kobo. South African rand wavered right today against the buoyant dollar. The dollar is strengthening, being the safe haven asset right, with tensions simmering in the Middle East following Iran's ballistic missile attack on Israel. So that's what we are seeing with the currency market. Up next, we'll be picking up the pulse of the day with lead analyst Onome Ohwovoriole. So stay with us for that. Pulse of the day on Market Pulse. We're focusing on the currency markets. Yesterday, we witnessed a naira depreciates heavily in the official window, down 8.25%, closing at 1,669 naira 15 kobo per US dollar at the official FX market yesterday. Today, appreciated to 1,657 naira 87 kobo. But we're seeing quite a lot of volatility in that market, and this is something that we don't usually see on the official window. It's usually the parallel market that suffers such volatility. This, of course, has been since the naira fell below the 1,600 threshold sometime in July. And throughout this period, the currency has fluctuated between 1.5, 1.6. It's striving to achieve stability, particularly during moments of dollar weakness. Records show that the US dollar index fell by 4.8% against a basket of currencies in Q3 of 2024. That's the worst quarterly performance in nearly 2 years. Will the naira ride on this wave? Those are some of the questions we'll be asking today. In September, the naira's price movement stagnated, attempting to regain equilibrium. But yet to date, the naira has depreciated by approximately 75%. The only positive here is that Nigeria's external reserve has experienced a modest increase, between August and September. So we're going to look at what's happening in that market. We have our analyst joining us for today. We have Onome Ohwovoriole, analyst at Green Ticker. Good afternoon, Onome.
Good afternoon, Joanne. Nice to have me here. Thank you for having me.
Yes, it's nice to have you here on the show. But looking at what's happening, in the currency market, there are analysts like you that are calling for intervention, more frequent intervention from the CBN. What would you say are some of the impediments to CBN's intervention in the currency markets right now? Despite the swell, right, in the foreign reserves, we're seeing the rise in that, but we're still seeing moderation in CBN's intervention, whether it's with the Dutch auction or selling dollars to the BDC. So what do you think is happening here? Is the CBN losing steam?
I mean, the core issue is first is the FX isn't there, right? The CBN can only sell FX that it has, and if it doesn't have FX, then it's not going to sell it. So there's no FX at the moment.
I mean, the reserves doesn't the reserve show some growth in the FX? Onome, are you there?
Yeah, but the thing is, reserves are like
Oh dear. All right, we're seeing some level of interruption with the network, but hopefully we're able to get him back. There are questions, right, considering the growth in foreign reserves of late between August and September. Why aren't we seeing as much interventions as we have in times past? We know the CBN constantly comes into the markets to somewhat stabilize, and work against that volatility. But now that there's some sort of shortage, the CBN isn't as active. So those are questions that we would like to perhaps get answers to and have our analysts share perspective on that. So we're going on a break. Hopefully we're able to get Onome back to share more of his perspective on what's happening in the currencies market. All right, so we are still here for Pulse of the Day. Key metrics in just a moment. We have Frank Fagbo with us while we try to get Onome back in. Frank, it's great to have you in and obviously perhaps rub minds on what's happening in the currency market. We're not seeing as much CBN intervention, and of course there are more worries, right? So we're coming out of a period where for Q3, dollar has been weaker.
That's right.
With the cut in interest rates, people are anticipating a weaker dollar. But now with the crisis in the Middle East, it's strengthening as a safe haven asset. So what chance does the naira stand against the dollar ahead? Those are some of the questions, you know.
One thing you want to do is to make sure you look at the past, what has happened in the past.
Right.
And if you look at what has happened in the past, you see that the last quarter of the year, the last quarter, the mid of the third quarter, edging into the last quarter of the year, we always have a lot of pressure in our FX. And pressure in our FX coming in from students are going to school. You're seeing a lot of people in need of FX resuming. We're seeing the whole aspect of the jackpot syndrome. And all of this is against the backdrop of CBN governor actually saying that categorically that the inception of selling naira-backed crude oil to Dangote refinery will ease the pressure on the foreign exchange. But all of this is not just going to happen overnight.
Right.
It will take some time.
Yeah.
And so it's a gradual effort. We didn't wake up one day and naira became and the naira became 1,600 from 100 naira.
We
it didn't just
did.
It gradually got to the stage. Yeah.
With the removal of the pronouncement, right?
Yeah, that was exactly.
Kind of woke up and it was collapsed.
We woke up and that was because of policies. And so if you look at if we're trying to bring something down, it's quite easy. But when you're trying to grow it and you're trying to make sure, you stabilize the naira, it's quite tough because it has to do with policies. Apart from that, you're seeing the CBN trying to fight it from monetary policy point of view, also trying to fight it from the market. You're seeing him trying to pump dollars into the economy. But a lot of all these policies is literally edged on Dangote, one man. I want to put it
too much pressure for one man, right?
That's too much pressure on one man. And it's because we're an oil economy.
Yeah, I mean,
if we're well diversified, all this pressure wouldn't happen. And that's why we've been talking about diversifying our economy away from oil.
Yeah.
Diversifying our economy away from oil. See what is happening. See what's happening globally. And the reason why we're not benefiting from this whole oil saga is because of what is happening in the Middle East. The price will definitely skyrocket. The sector has been deregulated. And if it's been deregulated, meaning whatever happens in the global market will have a direct impact in our market.
Yeah, so it's sort of a double-edged sword, the crisis in the Middle East, because we do stand to benefit from the hike in oil prices. That's right. But then there's inflation, there's the dollar perhaps strengthening as a result. And, it's also been highlighted that some of the issues that we're having with the price of crude is FX related. So, right. I mean, so much to anticipate and look forward to in the currency market, so much influencing it. I think I'm counting on Desi December inflows to boost the naira. But we'll be back in just a bit for key metrics with Frank.
Welcome back. This is Key Metrics. Let's take a look at what's been happening. We're really analyzing the remarkable resurgence of Nigeria's banking sector, specifically the Fulgars Group. The Fulgars rebound, a banking sector revival. The NGX banking index surged over 20% from April lows index, recovers from 774 in April to 938.12 in September. The Fulgars Bank, we're talking about the FB, First Bank, UBA, GT, Access, and Zenith drive the the recovery key points. Central Bank of Nigeria's recapitalization policy, the announcement that happened on the 28th of March 2024 led to a 24% decline in the NGX banking index. And you wouldn't necessarily blame investors, because investors are literally looking at what is happening, what the news, what is really happening in the banking sector. And when you have such recapitalization policy, investors will definitely want to trade with caution, and that's what we're seeing in the market. Let's take a look at a few of the numbers. You see FBN holdings, we're seeing a decline of 32%. UBA also experienced a decline of 14%. GT Co experienced a decline of 37%. Access Corporation, decline of 38%. And then Zenith, 28% decline. Recent rebound drive by positive financial results and improved financial market sentiment. A lot of analysts attribute recovery to the strong Q2 earnings and favorable corporate disclosures. You're seeing that the Fugus stocks performance, the likes of FBN Holdings, 28% increase in the market despite all the loss. And it looks like many of them are literally recovering. Their price in April low of 23 naira per unit share rose to 27 naira per unit share. UBA had a 22% rebound, and their low was 20 naira per unit share. They rose to 24 naira, 60 kobo per unit share. Let's take a look at GT Co. GT Co experienced a 40% rebound appreciation, and we're seeing that from 32% to 45%. That's some decent numbers. And remember that all of this is against the backdrop of what happened last week. We're saying that GT was one of the most profitable banks across the sector. Access also experienced 16% to 20%. It's quite a tall order, if you ask me. It's quite a tall order, but it looks like many of them are really overcoming this whole. They're coming back. They're bouncing,
they have no choice.
Strong.
They have no choice. And of course, it's believed that the banking sector is going to be one of those sectors that will buoy the markets in Q3.
Is that why you're seeing the government coming for them? 70%.
That's our show for today. Thank you so much for joining us at Market Pulse. We'll do this every weekday, 4 p.m. on News Central in partnership with Nairametrics.